Merger mania continues. Top story in the Journal this morning. General Electric looking to combine its oil and gas businesses with Baker Hughes. This transaction could be worth more than $20 billion. Michael, this is a real change. It's going to change GE hugely.
This is a fascinating strategic move by GE, and I also think it has big implications for the American consumer, because you've got the world's largest industrial conglomerate going into the oil field services business. That means more R&D, more technology applied to fracking. That means lower costs and lower oil prices. Absent some kind of ban on fracking in the next administration, we're going to be with low oil prices for a long time. Yeah. And this merger makes it almost sure.
It's also really interesting to look at just the level of deals that we've been seeing, right, Dagan? I mean, you're seeing companies try to get together in these couple of weeks before the presidential election. They want to get as many deals done as they can. Just this last week with AT&T Time Warner.
It was a record month, actually, for deals, and given all the mergers and combinations that we've seen. This is a bet on the health of the American energy business, and it's a bet. And you know, is this the one kickoff to what will be a lot more acquisitions, and not just the oil field services business, but also all along the energy sector, in terms of a lot of these hard-hit companies, or at least companies that are well priced at this point, despite the price tag on this deal.
I think you're right. We'll probably see more deals within oil. You agree with that, Michael?
Oh, absolutely. Yeah. I think Dagan's point, there's got to be some cost reduction, and there's going to be more efficiencies that are going to be applied to oil extraction. Again, I think people who are expecting $60 a barrel oil next year, I think they're going to be disappointed. I think the cap's right around 50, because that's where they're making money in the frack fields, putting oil onto the market.
All right, so watch the oil companies say oil services as GE pursues Baker Hughes in this major deal in the oil patch. We're also watching earnings. Oil giants Chevron, Exxon set to report today, as well as MasterCard. It's been a busy session for technology. Amazon taking a hit this morning. Google parent Alphabet profits surge. Let's characterize the earnings season so far, Michael, from your standpoint. Third quarter earnings?
Fantastic.
Really?
Oh, yeah. We don't like to look at earnings relative to current expectations, because companies have gotten really good at manipulating their earnings expectations. We look at expectations relative to what they were saying 6 months ago. This is the best earnings season that we've seen since back right after the crisis in 2009. It's been great on earnings. About 70% of companies are beating the earnings that they put out 6 months ago. 52% are beating revenue.
How's the guidance, though? What are they saying as far as what's to come?
Forward guidance seems to be affirming that this trend is going to continue. People are seeing better revenue environment than they saw 6 months ago, and they're saying it's going to continue into the fourth quarter, generally speaking.
And we've got GDP coming out at 8:30 this morning, and there's some economists who expect we could see 3% growth in the quarter. We haven't had 2%. We've been growing at less than 2% since a year ago, third quarter of last year, which is pathetic.
2.5% is the estimate on the GDP.
I know, but if we get 3, we're cheering that, and that's sad too.
It is, but isn't it so interesting that 10 days before an election, all of a sudden GDP goes from 1.4% to 3%? What? I'm sorry, I'm a skeptic.
Historically, though, people make their minds up about 6 to 9 months about their own personal financial situation, about how they feel about the economy. They don't wait until this close to the election.
Dagan's absolutely right, because I remember with the Bush-Clinton 1 election, GDP soared like 4% right before the eletion.
And people still acted like we were in a recession, even though the recession ended the year before the election year, early that year. And Bush was still saddled with that.
My favorite headline, Time magazine, Clinton isn't even in office yet, and they called it the Clinton recovery.
Okay.